Guys, we are about to see a Bitcoin move that a lot of people are not going to be prepared for. A Bitcoin move that a lot of people are going to not expect, and they are going to be on the wrong end of that trade. So guys, today I need to talk about this. This is key right now. I also need to talk about this. We do have a major fractal for Bitcoin. I do need to talk about what I see happening for the foreseeable future for Bitcoin. So guys, make sure to stick around. I will go through everything in this video. Welcome back everybody. My name is Chris, bringing you cryptocurrency videos every day, teaching you how to make money in this market. If you're new to the channel, then make sure to subscribe and activate the bell right now. Okay guys, it's Friday. I want to keep this short and nice, but action-packed with information. So the first thing you can see is that we are inside of the orange box. We did make a little bit of a push yesterday towards this red line, but this is the key level of resistance. You can see we also hit it multiple times right here. Boom, big rejection, boom, rejection, boom, rejection. So this is definitely a key level to break. However, you can also see another pattern here, and this is very obvious. You can see an upwards trend here of making higher lows as well as making higher highs, forming this kind of channel. Some would also say that this could be formed as a wedge if you draw this something like this. A wedge is usually a bearish pattern. A rising wedge like this, usually it does go up like this, just for us to break down out of that. But of course, it can also break to the upside, but just pointing that out. If you consider this a wedge, it has a bearish bias. But if you just consider this a regular channel like this, then it has a little bit more of a bullish bias. So nonetheless, we are right below the resistance level right here. And I think that Bitcoin in general is actually looking pretty bullish right now. The only thing is that we are inside of the orange box and we are right below this resistance level. So we'll need to pay attention to that. Apart from that, the traditional markets have also been continuing to go down a little bit here, trending down. You can see kind of like the opposite channel for the traditional markets. Instead of a channel upwards for traditional markets on the same time frame, we, like for Bitcoin, we're going up. For traditional markets, we've been going down, which is actually very interesting because you can also see right here how traditional markets were going up prior to this channel and Bitcoin was actually going down. So you're seeing a little bit of an inverse correlation, Bitcoin decoupling and actually doing the opposite of the traditional market, which is absolutely fantastic. So let's see if this trend is going to continue to hold on. This is a very interesting development. This just goes to show what Bitcoin was invented for. In the middle of these banking crises, Bitcoin is regaining some of that strength. Now, before I talk about some of these key levels and I talk about why most people are gonna be on the wrong end of the next trade, let's quickly talk about my trading strategies here. As you know, I am showing you the progress here, and since my video yesterday, I think we were at like 24% yesterday on this one. So we have added a couple of percent here on these trading strategies in one day, which is absolutely fantastic. And these are not gonna be like, they're not gonna go up 100% a day or 50% a day, 20% a day. These are slow and steady wins the game. As you can see right here, all of these trading strategies, which I show you from the beginning of when I open them up, you get to see them on my channel from 0% up until the point I close them. I show you if I get wrecked, I show you if I make money. So far, every single one of them have made money, and the current ones are looking pretty promising as well. So yeah, these are still continuing to add money to my account, trading that volatility up and down. So far, so good. I will keep you posted as always. And I still haven't added the percentage points here, guys. I will get to doing that probably on Monday. And by the way, there's not going to be a video on Saturday or Sunday, most likely, because I am doing some other things. But I will keep you posted. This is the video I will leave you with, but of course on Monday we will be back to making videos. And if you want to use the same settings I am using for my trading strategies, you need an OKX account. Make sure to claim a 50K bonus, up to 50K right here on this link. So click on this, sign up to OKX, and then you can go down and you can get my exact settings right here if you want to trade with these trading strategies yourself. And make sure to go up and watch my trading tutorials about how these trading strategies works. Now let's talk about this. This is the headline versus core versus PCE inflation. You can see that the headline inflation have been going down, the PCE have been going down. However, the core inflation has been also going down a little bit. However, it has not been going down as much. And so the question right now is, what are the Fed going to do? Well, if you look at the what the market expects during the next meeting, you can see that the market expects the Fed to not do anything. The current rate is about 500 to like 5% to 5.25, and you can see that the market is expecting that to also be the case in June. So basically, they're expecting the Fed to not raise the interest rates during the next meeting. However, the interesting thing is if you go to July, they're expecting, well, 45% are expecting the interest rates to be the same, meaning they don't increase the interest rate. However, 55% are expecting them to actually cut the interest rates by 25 basis points, which is very interesting because the Fed have really made no communication about that, but this is what the market expects. So the markets are expecting that in 1 month, in 2 months actually, the Fed will announce their first interest rate cut. So if they do not do that, because again, just like I said, this is not something the Fed has really communicated about. And if the market believes that they're going to cut the rates, if they do not do that, well, then you are going to see a bad reaction for Bitcoin. Now, this is key, and this is key to keep attention on, because short term, this could have a big effect. However, long term, I'm still bullish on Bitcoin. I still believe that we're going to crush this level eventually. However, just like I've always said, we're going to have these drops, guys. We're going to have big drops. It's not going to be up only, but the drops are made for buying. And this is why the bots are doing a fantastic job right here, because they're doing that in an automated way. But we need to be prepared for that downwards potential if the Fed actually sticks to what they've been communicating and do not cut interest rates during the next meeting. However, if you look throughout history, you can see the amount of times the Fed has actually communicated one thing but then done the exact opposite. So in 2000 or since 2021, rates won't rise until 2024. Then rates hit a 16-year high this month. Inflation is transitory. We hit a 40-year high, near 10% inflation. This inflation began. So you can just see the banking system is sound. We have regional banks collapsing left, right, and center. So the Fed, what they say and what they do and what actually happens are very, very different things. Now, one more thing I want to show you is the gold index chart. So you can see gold divided by the DXY, the dollar index, and then you have the Bitcoin price down here. And in 2018, you have the top in Bitcoin, you have the top in gold, or the previous top in gold. And then we both go down on the gold index down here. We go down with Bitcoin. So we form the bottom around the same time. And then we have a massive bull market for Bitcoin, for gold. We top out around the same time. We form a baseline for gold. We form a baseline for Bitcoin. You can see how these are looking very, very similar. We go down, we form a bottom for Bitcoin, form a bottom for gold. And since then, we have actually gone up with gold back to the baseline, which would be here at around $48,000. And we've actually gone above the baseline for gold divided by the dollar index. So these are looking very, very similar. And if they continue to rhyme, we are going to see that $48,000 Bitcoin sooner rather than later. However, this is on the weekly time frame. So this does not rule out the same thing I talked about previously, how we could see a drop for Bitcoin given the market's expectations here. And if the Fed actually sticks to their word to not increase sticks to the word of not cutting interest rates, we could definitely see a drop for Bitcoin as the market does not expect that. But then we could still see this play out, just a short term. Look at this, boom, come up here maybe, then expectations of the markets going down and then up. So we could actually see something like this and still have that drop for Bitcoin, guys. This is what I'm gonna leave you with, guys. Just like I said, no video tomorrow, Saturday or on Sunday. So I hope that you are gonna have a fantastic weekend, and I will see you in the next one.